Gene Fiscal.
And I'm Roger Debit.
And welcome to At the Seminars with Fiscal and Debit.
Gene, today we're going to look at the latest sci-fi movies on the silver screen.
And we're also going to take a look at some upcoming issues from the FASB.
Like sci-fi, these are not real yet, but could be soon.
Who knows? By the time you watch this, they may be. Introduce the first clip, Roger.
In this clip, we'll take a look at going concern issues with a futuristic CPA. Sit back and enjoy Robo CPA.
So how's it going, Joe?
Okay, I guess. But I'm having trouble understanding the new requirements for going concern issues.
So why don't you get some help from that new guy?
No, we're having a little trouble with him out in the field.
Where did he come from anyway?
He came out of the AICPA Cyborg Task Force initiative. They say he had a really bad accident when he was trying to do two things at once, trying to determine when to begin including going concern footnotes and making a cappuccino.
Ooh, so what happened?
The AICPA rebuilt him with mechanical parts. He's mostly machine now.
I wonder if he knows that the first triggering event would be if it was more likely than not, the company will not be able to meet obligations within 12 months after the financial statement date without taking actions outside the ordinary course of business.
Well, he did try to make that assessment at the toy factory.
Ouch! Well, what about the other triggering event?
You mean the one where it is known or probable that the company will not be able to meet obligations in 24 months?
Yeah, that's the one.
He tried that out at the gourmet popcorn plant. Another disaster.
That's really sad.
And then there was the encounter with my mother-in-law.
Oh no! Don't tell me.
No, actually that one turned out all right.
Ah! The mess! Joe, did your tin can friend here just track dirt onto my new carpet?
Yes, he really is a nice guy. And he's the one who told me what goes in the footnotes. The reasons for the going concern problem, the possible effects, management's evaluation, and any mitigating conditions and management's plans.
He really is quite bright.
What a shame. All the money the AICPA spent on him, is there anything he can do?
Actually, we may have a place for him in the firm. Shh, here he comes. Let me show you. Hey Fred, could you make me an orange mocha cappuccino?
It would be my pleasure.
Wow! Make mine a peppermint white chocolate, please.
Wow! We could sure use a guy like that around here, couldn't we, Roger?
Absolutely, Gene. I give this film a big thumbs up.
Me too. But only because later in the film they point out that SEC entities must also evaluate substantial doubt about the going concern presumption.
Well, that's a good point, Gene. Hey, so what's our next film?
I just love comic book sci-fi, and in this sequel, we look at the FASB's disclosure framework with that patriotic superhero, Captain Canada. I wish I could just go back in time. I can't handle the 21st century and all the new technology and all the new accounting rules. Captain Kennedy here. How'd you get in this little box, Miss Spider?
Don't worry about that now. The FASB is almost finished with their disclosure framework, but they can't seem to get it finished. It's almost as if someone has infiltrated our group.
Well, you know, ma'am, there are two parts to the framework. The board's decision-making process
and the entity's decision process.
I'm glad you're on the team, Captain Canada. But be careful. I have a tip that someone evil is coming to get you.
Gotta go, ma'am. Someone's at the door.
Cap!
Come
no,
on in.
It's
Come
him.
on in.
Cap, can you hear me?
Lucky, you're still alive.
I'm not Lucky anymore. They call me Yorgi, but you can call me the Winter Solstice. I've come to kill you.
Oh, sure thing, Lucky. Hey, have a seat, old buddy. You know, Lucky, the FASB's process is to consider but not automatically include disclosures. They have to study the cost-benefit. But you know, we really can't trust the FASB, I don't think. I think they've been infiltrated.
Yes, by me.
Oh, that's great. So, how'd you like some flapjacks, Lucky?
I told you, I'm no longer Lucky.
Here you go, Lucky. Anyway, the goal is not to reduce the disclosures, but to make them more relevant. Sounds a little suspect to me, eh? Maple syrup? Well, so the process may revise current disclosures to do not add value. It really has nothing to do with the volume.
You're ruining my bionic arm.
Oh, let me give you a hand with that, eh?
Stop that, you fool!
Of course, the PCC will consider the issue as well, so I suppose there is some help. Oh, can I help you?
I don't need any more help from you, Captain Canada. I'm getting out of this crazy country and far away from you. What is that infernal racket outside? It's driving me crazy.
Racket? Oh, no, sir. That's one of Canada's finest exports, eh? It's Justin Bieber. Oh, it makes my heart proud to be a Canadian when I hear that.
Okay, that stunk. And what a shame after such a great first movie. A big thumbs down from me.
I have to agree with you on that one. Thumbs down.
Nothing more to say?
Not on that topic.
I agree. So tell us about our last film, Gene.
Well, now, here's one you're sure to enjoy. It deals with the new rules for leases.
Oh, that's the one where the core concept is that a lessee should recognize assets and liabilities arising from a lease.
Right you are, Roger. So here we go with a fresh take on that 60s classic, Dawn of the Planet of the CP Apes.
Miss Heston, Mr. Gibbons, and Mr. Mandrill will be right in.
Thank you very much.
Hi, I'm Don Gibbons.
And I'm Bob Mandrill.
Hi.
Hello,
See.
good to see you.
I'm Charlene Heston, your peer reviewer. Well, first, I want to thank you for sending me the financials in advance, but I do have a couple of questions. Are you familiar with the new lease rules?
Basically, yes, the classification is based on the degree of consumption.
Type A, like equipment and such, gets used up.
Whereas Type B, real property, like say a store in a mall, does not.
Oh, I just love the shops at the mall, especially Banana Republic.
What do you mean by that?
Nothing. I was just making conversation.
Don. No harm done. No harm done. Okay.
Well, in all cases, a lessee will record an asset and a liability on the balance sheet. Now that can get a little hairy.
What did you say? Are you calling us Harry?
Don. Take it easy. Relax.
I mean, many people feel this inflates their balance sheet.
What about the income statement?
Well, I'm afraid you messed that one up. Although you do show a straight line expense for a Type B lease for a Type A, you show interest and amortization.
Well, what about operating leases?
Oh, haven't you heard? Operating leases are gone except for 12 months or less. You're living in the past, guys. To be honest, your practice needs to evolve.
What exactly is that supposed to mean?
Don. He's only trying to help. Don, relax.
Just one more bit of bad news, and then I'm done. You used the performance obligation approach. That died on the vine. The rules are very close to the old rules now.
Look, lady, we have to pass this peer review.
Take your stinking paws off me, you darn dirty ape!
What did you call us?
Don, calm down. Calm down. Are you okay, Don? Are you okay?
Yeah, I guess so. But I swear, if I had some poo right now, I'd throw it at her.
Oh boy, that was weird. It's a good thing this is science fiction. There's no effective date yet. I give this a 2 thumbs down.
Well, I give it a thumbs up. In fact, 2 thumbs up. And for the record, I kind of like the performance obligation approach.
You would.
What's so wrong